Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, in this episode, I'm going to cover exactly what happened and what's coming next. It was a mixed 5 days for Wall Street, though the benchmark S&P 500 managed to rebound from last week's sharp sell-off by eking out marginal gains. A boost to sentiment from the end of the longest U.S. government shutdown in history and positive trade developments was offset by continued weakness in the artificial intelligence trade and hawkish comments from the Fed Reserve speakers. Recent hawkish comments from Fed Reserve members suggest a higher bar for rate cuts due to concerns about inflation and a strong labor market. Oh, is that what we have? We have a strong labor market. These officials have expressed a preference to hold rates steady, citing risks of inflation reigniting and the possibility that rates are not yet restrictive enough. This hawkish shift has lowered expectations for a December rate cut, causing market fluctuations. Okay, so as a result, markets are now pricing in only a 69% chance of a quarter point cut. In my opinion, if Kamala Harris would have won, we would have cut 3 times by now. And I also believe the nation would be well on its way to collapsing. That's right, guys. We ended the nation's longest shutdown, a temper tantrum by Democrats because we wouldn't spend $200 billion on healthcare for illegal aliens, or because we wouldn't send $4 million to the Balkans for LGBTQ democracy grants. So all that ended after 43 days. But don't worry, I've got smoke for both sides. One thing we were sure to fund was money for Israel, which was unaffected by this little dust-up. And look, here's my favorite part of the whole ceremony. Kenny Griffin was there, clapping and snapping. I have a feeling he was there to discuss the new case that's brewing against him and Citadel. You heard right, guys. The Genius Group filed a federal securities class action lawsuit against Citadel and Virtu for alleged market manipulation, alleging that Citadel and Virtu engaged in a long-running market manipulation scheme that includes spoofing and naked short selling of the company's shares. Now, guess who's covering the story? The Manila Times, the Taiwan News, the Gloria Terminal, and the Donahue George YouTube channel. Now, the Genius Group was having a pretty quiet day on Friday, finishing at 0.8629, up 2.85%. But after the bell on the news jumped to $1.30, tacking on 50.65%. Give them hell, guys. One thing Wall Street breakfast skipped over is that President Trump proposed the idea of a $2,000 tariff dividend that would use revenue from tariffs to issue payments to low and middle income Americans. But there is no authorized federal $2,000 stimulus payment coming in November. Rumors circulating online are false and largely stem from a presidential proposal that has not yet been approved by Congress. So for the week, the Dow added 0.3%, the S&P 0.1%, and the Nasdaq shed 0.5%. The Russell 2000 took the worst of it, losing 1.8% to finish at 2388. That's because small caps are the most dependent on rate cut relief. The VIX added 3.9% to end at 1983. Which sector was hot last week? Healthcare, up 3.9%. Which took the hit? Consumer discretionary, losing 2.7%. Commodities and bonds, crude oil, WTI, added 0.6%. to finish the week at 60.09 per barrel. You know that I like that far under 60. Gold added 2.1% to finish over 4,000 at 40.94.2 an ounce. Natural gas added 5.8% last week, and the 10-year bond yield dropped 0.2 basis points to finish at 4.148. Under crypto, Bitcoin lost 5.9% last week, Ethereum 6.7%, and XRP shed 0.3%. And the first true spot XRP ETF started trading this past week. That's the 30-minute on your screen for XRPC. Early on, I saw prices in the 40s, but I must have been seeing things because that activity has since been erased. But we did set some records. XRP ETF surges to 26 million in opening volume within 30 minutes. And XRP ETF posts year's strongest debut with 58 million in first day trading. On Friday, XRPC closed at 2014, losing 42 cents or 1.73%. We also learned that Canary's brand new HBAR ETF made it on to the Nasdaq's Reg SHO threshold list after only 12 days of trading, and it's still on there as of Friday. Makes me proud to know we trade in a lawless cesspool of manipulation and corruption, all while we pay FINRA and the SEC to ignore all this activity on purpose. Paul Atkins' salary as the SEC chairman is not explicitly stated, but he receives the standard salary for the position, which has been an annual figure of $1,334,000 for the SEC chair since 2022. While his salary as chairman is based on the government's standard pay scale, his previous role at Potomac Global Partners generated millions of dollars in consulting fees from companies that could soon be regulated by the SEC. I'm sure there's nothing to worry about. The crypto market cap is having a shit month, a shit week, and now a shit weekend. At the time of this recording, Sunday morning, I've got it at 3.23 trillion. Bitcoin, 95,383, down 7.46% over the past week. Ethereum, 3153, down 9.12%, and XRP down to 221, losing 2.77% over the past 7. Now, November has historically been one of the best months for the stock market, with the S&P showing an average gain and a positive return in most years, dating back to 1927. It's often the strongest month of the year for the S&P, and it's a part of a stronger 6-month period for stocks that runs from November through April. But what's happened so far? Trump floated a $2,000 stimulus check idea that no one is voting on. The longest shutdown ever finally ended, and Kenny G showed up to celebrate. The Fed Reserve members came out to cast doubt on a December rate cut, even though hiring is collapsing everywhere. Citadel and Virtu got sued for what they do best, and the entire financial media swept it under the rug. XRP's spot ETF finally started trading. They shorted the shit out of the new HBAR ETF, so much so it landed on the threshold list, and I'm sure that's what they're doing to the new XRP spot ETF. But we won't get to see that data for a couple of weeks because the bad actors are permitted to hide their positions and mismark short orders for longs. We did hit some impressive volume numbers, but we went down the crapper with the rest of crypto anyway. There is still the threat of a persistent AI bubble out there. And I don't know if you've noticed, but we're about to attack Venezuela. So buckle up, buttercups. I've never traded through a year like 2025, and I think it's going to get even crazier, so be prepared. Now I want to talk about the avalanche of XRP ETFs in the bullpen ready to trade. For November, as you know, there is no Fed meeting scheduled. The next one will be December 9th with a rate decision on the 10th. Thanksgiving Day, the stock and bond markets are closed. Black Friday, the stock market closes early at 1 p.m. Eastern Time, and the bond market will close at 2. But as of today, November 16th, several spot XRP exchange-traded funds are still awaiting approval and trading from the SEC, which is now back in business. While one product from Canary Capital has recently launched on the 13th, and we set some great volume records, many major financial institutions still have active pending applications. The remaining XRP ETFs awaiting full approval and the start of trading include applications from 21 shares. That should have started trading last month on the 19th. Bitwise, that should have started trading October 20th. CoinShares, that should have started trading October 25th. Franklin Templeton, this one's a little different. This major asset manager, 80 years old, has an active application with filings appearing on the DTCC platform for this month. That could happen as soon as Monday the 17th. Wouldn't that be something? That one should have been trading back in June, in my opinion. Grayscale has proposed converting its existing XRP trust into a spot ETF. That deadline was October 18th. Wisdom Tree, they should have been trading October 24th. And ProShares and Rex Osprey have also filed for additional XRP-related products, some of which are futures-based or use alternative structures. So I put all these ETF sponsors at the top of the calendar, just ready to stick them on a date. These ETFs were all delayed multiple times. Atkins knew all he had to do was delay the launches into the government shutdown window and he'd be in the clear. This man is not a regulator. He's not enforcement. This job is more like a post for him, like being the ambassador to Greece. Both he and the head of FINRA are nothing more than the federal government's liaison to Wall Street. They do exactly what they're told, and that's how they got their jobs. They don't go after anyone without permission. All these products are currently listed in pre-launch mode on the DTCC platform. That's a technical step indicating they are operational and ready for market once they receive final SEC approval and launch on major exchanges like NASDAQ or the New York. What a great time to be alive. But we are now at the mercy of Paul Atkins entirely. Because the timeline for ETF approvals is dynamic, with some analysts predicting a wave of approvals by late this month, and that's due to a recent fast-track registration process being utilized by the issuer. So basically, these will launch whenever the SEC feels like it, whatever works best for them and Wall Street. Do you think the White House, Wall Street, BlackRock, the regulators aren't coordinating or communicating about these releases? You better think again. Now, don't forget, the final deadline for the global ISO 222 migration, particularly for SWIFT, also happens this month. JP Morgan mentioned a specific date of November 22nd for institutions on the SWIFT Fin network. So like my wife says, pull my hair and slap my ass, because this could get exciting. Will Paul Atkins delay all the ETFs into December or into 2026? Or will he let them loose in an avalanche? We shall see. But do you want to know what Uncle Frank is concerned about? Are they waiting for the AI bubble to pop and then we'll release our avalanche of ETFs? Will they, meaning the globalists, cause the bubble to pop? Try to think like your enemies on Wall Street. What would be the absolute worst time to let all these ETFs trade? Do you really think, while they're protecting Bitcoin, Ethereum, Solana, that they want a low-priced ETF or crypto project like XRP going live and going wild, going parabolic, drawing tens of billions of dollars from their favorite projects and ETFs that represent them? I don't think so. Guys, at this stage, all I want is the U.S. government and its shitty regulators out of my project. I long for the day Wall Street stops targeting and shorting XRP and its ETFs and goes net long, because XRP is a better project than Bitcoin. It's faster, it's cheaper, it has a better use case. It doesn't have to be mined. It's not a menace to the environment. And guess what? We know who started it. We know who has the largest piece of it. It's a reputable company, not a phantom or the NSA. XRP price outlook: if 7 spot ETFs attract 600 million in monthly inflows. The recent debut of the first U.S. spot XRP ETF has revived interest in how sustained ETF inflows could influence XRP's price in the long term. The launch of the Canary XRP ETF, XRPC, generated strong demand, posting more than 58 million in trading volume and attracting approximately 245 million in net inflows on its first trading day. This outcome has intensified market attention ahead of additional XRP ETF rollouts expected from several major issuers. Following XRPC's introduction, focus has now shifted to the 6 remaining spot ETFs that are awaiting their market debuts. Firms such as Grayscale, 21 Shares, Franklin Templeton, and Bitwise are among the issuers preparing to enter the space. Should these products record even partial demand comparable to XRPC's initial performance, they could collectively bring a sizable amount of new capital into the XRP market. If each of the remaining 6 funds were to attract half of XRP's opening day inflows, the combined amount entering the market could exceed 700 million in their first sessions alone. Okay, so that's what I'm here to see. Let's not talk about price targets until XRP hits a new all-time high over 384. You see, we don't have this kind of fear hanging over the head of our crypto project. Bitcoin Maxi sends the SEC an 8-point letter to stop XRP ETFs. No, this is what we have instead. The Black Swan Capitalist recently shared a video of the president of the European Central Bank, Christine Lagarde, on the suitability of various digital assets for central bank reserves. His post revisited a long-running discussion about which networks meet the standards global institutions expect from reserve-level instruments. He highlighted XRP and XLM as the key players, noting Ripple and Stellar's work with multinational organizations over the years. Before I continue, let's revisit a couple of things. Ripple works with over 300 banks and financial institutions worldwide through its RippleNet network. While most of these partners use RippleNet for its messaging and settlement technology, not all of them use XRP directly for transactions. But Ripple has entered into over 1,700 NDAs, non-disclosure agreements, with various financial institutions and companies for commercial transactions and the integration of its technology. These agreements were brought to light during the SEC legal case and have been part of Ripple's strategy for holding private talks and conducting commercial deals involving XRP. Now, guys, this is all from this past week. In the video, Lagarde addressed whether central banks should include Bitcoin in their reserves. She said reserves must be liquid, secure, and safe, and added that they should avoid any suspicion of money laundering or criminal activity. She made her position clear when stating she is confident that Bitcoins will not enter the reserves of any of the central banks. Her comments reflect the collective view within the ECB's governing bodies that reserve assets must exhibit specific qualities tied to operational reliability and regulatory clarity. This distinction matters for digital assets seeking relevance in formal financial environments. The ECB did not question the broader crypto sector. However, it indicates that assets lacking predictable settlement behavior and compliance frameworks do not fit the requirements of sovereign institutions. Bitcoin structure does not prioritize these areas. This creates a natural separation between speculative assets and networks designed for regulated financial applications. Now you know why Bitcoin maxi pads are writing letters to the SEC to stop our spot ETFs. Now, I'm not saying the ECB or the world will begin using XRP or XLM, but I can now state with confidence they won't be using Bitcoin. Now, what did Christine Lagarde, the president of the European Central Bank, say just last week? She said reserves must be liquid, secure, and safe, and added they should avoid any suspicion of money laundering or criminal activity. Okay, from last month, the U.S. government seized more than $14 billion in Bitcoin and charged the founder of a Cambodian conglomerate in a massive cryptocurrency scam, accusing him and unnamed co-conspirators of exploiting forced labor to dupe would-be investors and using the proceeds to purchase yachts, jets, and a Picasso painting. Federal prosecutors charged Prince Holding Group chairman Chen Zi with wire fraud conspiracy and money laundering conspiracy. There it is. Am I the only guy that feels this way? No, I've been warning for months we could see a profit-taking rotation from Bitcoin into XRP. Some analysts are moving capital from Bitcoin and Ethereum into XRP, driven by factors like XRP's relative stability, institutional interest from new ETFs, and a perceived potential for outsized gains given its smaller market size compared to Bitcoin and Ethereum. This rotation is seen as a tactical rebalancing, with some analysts viewing XRP's payment infrastructure and legal clarity from the conclusion of the SEC lawsuit as a potential catalyst for future growth, though market conditions and the broader crypto ecosystem's performance remain critical factors. So what's Uncle Frank most concerned about? That they pop the AI bubble and then release the XRP ETFs into a risk-off atmosphere. Concerns about an AI bubble risk have intensified recently, with a sell-off in AI stocks, warnings from major financial institutions, and admissions of worry from some AI company CEOs. The current sentiment is nuanced, with some experts calling it a bubble, while others see a fundamental, long-term industrial boom. And what are the managers of the president's blind trust investing in? AI tech stocks? Crypto? Nah, they're buying bonds. President Trump bought at least $82 million in corporate and municipal bonds from late August to early October, including new investments in sectors benefiting from his policies. Financial disclosures made public on Saturday showed, according to the forms released by the U.S. Office of Government Ethics, Trump carried out more than 175 financial purchases from August 28th through October 2nd. The maximum total value of the bond purchases exceeded $337 million, according to the filings. Most of the assets listed in Saturday's disclosures consist of bonds issued by municipalities, states, counties, school districts, and other entities with ties to public agencies. Trump's new bond investments span several industries, including sectors that have already benefited or are benefiting from his administration's policy changes, such as financial deregulation. Corporate bonds acquired by Trump include offerings from chip makers such as Broadcom and Qualcomm, tech companies such as Meta Platforms, retailers such as Home Depot and CVS Health, and Wall Street banks such as Goldman Sachs and Morgan Stanley. It sounds like the guys that handle Trump's portfolio are bubble-proofing the president's money to me. Now let me show you why you should watch this channel, why you should hit that like button, why you should repost this on your social media accounts for me and share this with your friends, because I will show you the black swans that are hiding in plain sight. Let's start back in June. Office delinquency rate for mortgage-backed securities hits record high in June. Let's move to July. Office CMBS delinquency rate spikes to record 11.1% in June, worse than the financial crisis meltdown peak after a 3-month relapse. A Los Angeles tower, the FEMA headquarters in Washington, a 100-year-old tower in Manhattan joined the list. Some delinquent loans were, quote, cured, including by transfer to a custodial receiver, and extend and pretend, and came off the list. You guys know what that means. They're rotating the really bad loans out of the portfolio. That means these numbers are actually worse than they're disclosing. Let's move to August. CMBS delinquency rate notches another all-time high. October, office leads as CMBS delinquencies resume upward climb in October. Okay, guys, so that chart isn't looking so good, is it? So commercial and multifamily is crashing. And do you think this will get better in places like New York, where they just installed a socialist mayor? They crash these markets on purpose and sell the debt and the properties at huge discounts. And Blackstone, BlackRock, etc. pick them up at garage sale prices. Now join me at the NYSE 2025 trading calendar. On Monday, the MSCI index will rebalance. Google to see if any of your stocks are in the index or getting added to it, or worse, getting kicked out of it. Tuesday, the 25th, we have another short interest release date, and I'll finally get to see how much they've been shorting XRP and HBAR ETFs. Earnings this week are about two things only: NVIDIA and the health and spending habits of the consumer. I'm watching Tuesday before the bell, Home Depot. Wednesday before the open, Target, Lowe's, TJ Maxx. But Wednesday after the bell, the big boy, NVIDIA. Friday morning, watch Walmart before the open. This is what it's all going to be about: NVIDIA, Walmart earnings, and the return of jobs numbers. What to watch this week? The final full week of trading for the month of November will bring investors two crucial earnings reports and the restoration of the September jobs report, which will set the tone for the year's final weeks of trading. Results from NVIDIA after the close on Wednesday and Walmart on Thursday morning We'll provide an update on the AI trade and the U.S. consumer, which have offered investors reasons for enthusiasm and caution in the last few weeks. But this could also be the week all hell breaks loose in Venezuela. That could jump off at any moment. Now that the government's reopened, returning to the calendar events this week, there are still a lot of asterisks, so it's hard to say what they will release this week. I can tell you, we have 3 Fed members speaking on Monday and 1 on Tuesday, and they've been selling that we don't need to cut in December and ignoring the jobs crisis deliberately. On Wednesday, we'll get the minutes from the Fed's October meeting at 2 p.m. Eastern Time, and I believe they will use that to continue to spook the markets about no December rate cut. On Thursday, we will get the U.S. employment report and unemployment rate, initial jobless claims, which could be a shocking number in my opinion, all at 8:30 a.m. Eastern Time. But then 3 assholes from the Fed are scheduled to speak. If these numbers are bad, some may flip to a rate cut for December. And then on Friday, 3 more Fed speaker presentations. So that makes 10 total for the week. They are out selling their narrative, and we'll get some useless, manipulated consumer sentiment data at 10 a.m. Eastern Time on Friday. AMC hit a new 52-week low, reaching 225 on Friday the 14th. So I nibbled at it when I got the alert. What can I tell you guys? I'm a glutton for punishment. I think the rest of Q4 looks good for revenue. Big movies releasing in the remainder of 2025 include Avatar, Fire and Ash, Wicked for Good, Zootopia 2, Five Nights at Freddy's 2, Wake Up Dead Man, A Knives Out Mystery, and the SpongeBob movie, Search for SquarePants. Other anticipated releases are Jurassic World Rebirth, The Conjuring Last Rites, and Megan 2.0. And don't forget, the most anticipated popcorn buckets for the remainder of 2025 include a range of movie and holiday-themed items, such as the Zootopia 2 popcorn buckets, the Now You See Me, Now You Don't Magic Trick bucket, and the Back to the Future DeLorean bucket. Then there's Nosferatu, a coffin-shaped popcorn bucket, will be released for the vampire movie, which is set to come out in late December. And for the holidays, popular items could be the Disney World Mickey Elf and Gold Musical rotating tin buckets. So what exactly is an Uncle Frank's speculative and crypto portfolios right now? Well, this is not investment advice. I'm not an investment advisor, and I will never tell you to buy, sell, or hold any security or cryptocurrency. This channel is for entertainment purposes only, and I'm concerned we're about to get our asses kicked, but we'll see. I've been making smaller trades and raising liquidity, but let's start with the list. Take a screenshot. GDC, that's the GD Culture Group. Rick the Pilot put me on that one. Thank you, Rick. I'm up over 20% in less than a week so far. Supposedly, they have 7,500 Bitcoin on their balance sheet. So I get some exposure to Bitcoin in this deal. They theoretically could sell off 30 to 40% of their Bitcoin and buy back all their shares. That's a pure spec play, but I like it so far. ACHR, Archer Aviation, my baby. I still believe this will be 30 to 35 by the 2028 Olympics. They just leased an airport in LA. Now I'm just waiting for them to deliver their first piloted midnight to Abu Dhabi, and that should trigger a fat check in the low tens of millions of dollars, which would mean we're not pre-revenue anymore. So every time it drops under 8, it's a no-brainer buy for Uncle Frank with an order book that exceeds $6 billion and strategic partners like Palantir, Anduril, United. I think this one will surprise everyone someday. It's not just a plane, it's a new way to travel. And now the FAA is back open, so maybe we'll get certification in early 2026. UTZ, Utz, that's the potato chip deal. They had a solid quarter. The stock dropped. The senior executives all got together and bought the stock on the same day. I came in and bought it under their price, but I'm in the money now. I like that company. AMC made a new 52-week low. I got the alert and I bought it because I think they've got good revenue ahead for this quarter. ULTY, that's a utility ETF I like because it pays weekly and a ridiculous dividend yield. CCCX, that's a SPAC. That's going to become Inflection or INFQ in 2026. That's my new quantum pick. CHAC is also a SPAC that will become Xanadu. That's a Canadian quantum company, a world leader in photonic quantum computing. GSIT, that's a semiconductor company that makes a chip that uses up to 95% or more less energy than a comparable NVIDIA chip. So I'm excited about that one. SMR, that's NuScale. Small modular reactors. I'm down between 6 to 7% on that one, but I still think that sector is going to do really well in the future. We invested so much in AI. We're going to need data centers, and we simply don't have the power. So SMRs could be the best solution to that problem. This is currently the only company in the country with an approved SMR design by the NRC, but I'm sure others will join it soon. SRFM, I love Surf Air Mobility. It's a tiny market cap, under 140 million, but somehow this tiny company leads the nation in scheduled departures, and Palantir owns 20% of the joint. I think they have a future. On the crypto side, I'm long XRP. XRPT, the 2X, XRPT options that are expiring Friday, so I'm sweating that out. TEL, that's Telcoin, Ondo, and HBAR. And that's everything I got. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.